Hello, hello. Hi, everyone. Welcome to our coffee chat of this month. If you are new here, I'm 𝗲𝗵𝗶 𝗡𝗲𝗊. I'm the host of these sessions. And this is the place where we meet once a month with our colleagues to discuss the mega trends shaping the payments industry. And today, we are going to talk about cross-border and more specifically about stablecoin real-world use cases. And before we start, as usual, we just have a couple of guidelines to ensure that we have a successful meeting. So here in the screen, you have all the guidelines, but I want to highlight just two of them. The first one is that please keep in mind that we record those meetings and that we publish them in our YouTube channel and also in our website. So if you feel that you want to recap some of the discussions or collect some data that you saw in this presentation, you can collect them later in those platforms. And second thing is that we would love to have your cameras open. We truly encourage participation. So if you can, please open your camera. And also, if you were not here last time, just one thing that we changed it a little bit since last time. So from now on, we are testing a new method where we leave our guest speakers to go through the entire presentation first without interruption. And then at the end, we will open some space for everyone as in a Q&A session where you can make questions or do comments and you have like an open forum discussion with everyone in the room. So let's do like that. But also, if you want, you can still use the chat, right? If you want to keep discussion with your colleagues, or if you don't want to miss a question that you just had in that time, you can still use the chat. And at the end, we can bring those questions in the Q&A part. And just a quick recap. So this year in the coffee chat, we are reviewing our megatrends. We already did 3 of them. So we already talked about B2B payments, multi-rail world, and agentic commerce. And today we'll talk about cross-border. And for that, we have 2 amazing guest speakers. From PCMI side, we have 𝗵𝗲 our senior analyst. Miha, thank you so much for joining. And our external guest speaker is Héctor Ramírez, the head of sales of Bitso Business, where he leveraged his understanding about corporate government and market infrastructure to help companies navigate and thrive this evolving digital and hybrid finance landscape. So Héctor, thank you so much for accepting our invite and being here with us today.
Thank you so much. Happy to be here.
Great. And well, let's start with 𝗵𝗲. Miha, the stage is yours.
Thank you, Fer. It's a pleasure. Thank you, guys. Well, as Fer introduced me, I'm 𝗵𝗲 I'm Senior Analyst at PCMI, Digital Asset Specialist as well. So basically here I would like to start, or let's begin with the broader transformation that it's taken place in the global movement. Here we saw like that traditional cross-border payments still rely heavily on correspondent banking, SWIFT, and these systems are trusted. Yeah, that's true and are globally established, but they were designed for a different era. Transactions can be slow, expensive, operationally complex, and dependent as well on several intermediaries. On the other hand, actually, we have also card networks that improve global acceptance. While at the same time, we have a closed loop platforms as PayPal, Revolut, Alipay that created better user experience. However, if we have to analyze like these ecosystems, they remain fragmented and are not always actually easy to connect. We also have domestic real-time payment systems that are also expanding, but most of them, they remain focused on individual countries, right? We also had in the last couple of years the origin of CBDCs that they offer programmability, but adoption is still actually largely experimental. Okay, now what are like stablecoins doing? Stablecoins actually bring together three important characteristics, right? There are speed, global accessibility, and programmability. And the scale of stablecoins in the last years, I mean, it's already significant. I mean, stablecoins actually process more than $33 trillion in 2025. What does this mean? I mean, this does not mean that the stablecoins actually will immediately replace the SWIFT, card schemes, or domestic payment systems. What we see is that instead they are emerging as a new settlement layer that can connect and complement the existing infrastructure, and we are already seeing this. And the clearest economic opportunity may not be in consumer payments, actually, but in global B2B payments and B2B transactions is the real opportunity that we are seeing as most promising, right? If we move to the next slide, we are going to see that. Yeah, sorry, someone is speaking, right? Oh, okay, sorry.
You can go. Yeah.
Okay, awesome. Okay, so here we can measure and we can understand better the opportunity in global B2B payments. And cross-border B2B payments expose one of the greatest inefficiencies in the current financial system, that is the need to pre-fund accounts. Banks, PSPs, payment providers, and different companies, big companies, often they keep liquidity across different countries and currencies to ensure and to be sure that payments can be completed. And this is an estimated $27 trillion that might be held like in 𝗏𝗏 accounts globally, which is a huge amount of money, right? And this is capital that is available for payments, but this cannot be efficiently used elsewhere, right? Well, actually, stablecoins can help reduce this dependency by enabling this near instant settlement. Instead of keeping money in every market in advance, actually this liquidity can potentially be transferred when it's actually needed, right? And when it's actually required. So this creates three main benefits, right? First thing is lower transfer and foreign exchange costs. That's very important. Second, greater capital efficiency, as we can see in the here, because less working capital remains trapped between payment initiation and the final settlement in that payment process. And the third one is the greater control through programmable transactions. Funds can be released only after specific conditions are met. These, of course, can support use cases that are really important for the economy, such as international supplier payments, cross-border payroll, internal liquidity sweeps, and also real-time transfer between subsidiaries in the same company. So it also can allow like treasury teams to manage balances more dynamically, also including through what we call tokenized short-term financial products. Well, here we are introducing a new concept that it's tokenized deposits that we are going to speak a bit more about this in the next slide. But the B2B opportunity here is not simply about processing the same payments faster. It's about how can we transform and how companies can transform actually liquidity from a very static resource into something that that companies can manage in a continuous way, continuously, and in real time. So this creates a new question for companies and financial institutions. Where can they participate and generate revenue? With this question, we have new monetization models for financial institutions that we can point out here. And stablecoins are sometimes presented as a threat to traditional banks. It's been like this for the last 5 years, but they can also create several new revenue opportunities, right? The first is transaction fees and foreign exchange spread capture. Banks can support stablecoin payments, and at the same time, they can monetize these conversion, settlement, and liquidity services. The second one is custody and wallet infrastructure. They have corporate and institutional clients that require secure ways to hold assets, manage permission, and execute different transactions. The third one, use case here that we have on this new model is that banks can offer kind of an embedded stablecoin payments through APIs. They can integrate these capabilities into fintech platforms, marketplaces, enterprise software, and different like payment systems. The fourth one that we have here is that financial institutions can also issue their own stablecoins or tokenized deposits, as I mentioned earlier. This allows them actually to provide actually programmable payments and maintaining at the same time funds in their own ecosystem, which is really important for banks and financial institutions. Finally, we have a very important part of this story that is, okay, the regulatory advisory and compliance, right? So stablecoin users and corporate users actually will need the support, right? With transaction monitoring, reporting, and local regulation in order to avoid anti-money laundering and another different aspects of that the regulation wants to avoid in the use of stablecoins and crypto, right? So the key strategic question here for banks is no longer only whether they should adopt stablecoins. It is actually which role they want to play, right? They want to be an issuer. They want to provide custody. They want to be a liquidity provider, an infrastructure partner, or maybe just focus on compliance, right? Or a combination of these different models or these different services that they can offer. And just to recap this part of the presentation, we understand that the infrastructure that develops fastest actually will depend heavily on regional market condition. And if we go to Latin America, and we here speak specifically about Latin America, we have three models that are developing simultaneously. We have wallets, domestic RTP, real-time payments, and stablecoins. Here we can see that the stablecoins are actually being one of these rails in this multi-rail scenario that we are having across the different regions, and particularly in Latin America. So the challenge here is that when we have wallet schemes, domestic real-time payments, as we can see here, the different examples in the different countries, but the challenge here is how we solve the regional interoperability, right, in the cross-border ecosystem. So connecting these systems actually requires coordination among the different actors, central banks, regulators, financial institutions, and also foreign exchange providers. So the thing is that now if we analyze the status of the stablecoin rails or the stablecoins infrastructure, we face a regulatory uncertainty and, of course, markets fragmentation, right? But they are already being used for cross-border payroll, supplier payments, remittances, and corporate settlement. This is particularly in Latin America. So as a result, the likely winner might not be one infrastructure. Or maybe if we see that, okay, stablecoin infrastructure or stablecoin rails will prevail, right? Actually, the different rails have different benefits. Wallets, for instance, can control the customer experience. Domestic RTP system can process the local payment leg. And stablecoins actually can provide the cross-border bridge between markets, right? This is something that could happen in the future. So Latin America may therefore develop a more maybe hybrid ecosystem with different rails performing different parts of the transaction. But we understand that the stable coins actually are progressing in the adoption in the use cases in Latin America, and that they have potential in order to prevail in the Latin American market. Now, if we move forward here, now I give the word to Hector. Hector, everything's yours. Thank you.
Thank you so much, Mikhail. Very good comments with regards to how the market is evolving. First, let me introduce myself very quickly. I am Hector Ramirez. I am the head of sales for Bitso Business. I got the opportunity to work around 27 years in the traditional banking. That being with opportunity to work in Mexico, in the US, in Argentina, in Brazil, and also in Europe. And I got the chance to see the evolving of this technology and payments, which is thrilling. So last around 4 years, I have been dedicated to stablecoins, payments, APIs, FX as a service, which I would like to share my input, views, and comments on this. Can someone please move to the next slide, please? So first thing, as an introduction, I don't know if you get the opportunity to interact with SWIFT. It is a nonprofit organization. They have around 11,000 implementations, bank, financial institutions, and other type of entities that are enabled. They have around, this is a 1973 technology. This is something that it is very important. It is that it is a messaging system. So it is very interesting that sometimes in order to do the payment across different jurisdictions, it will take as many touch points that you will have. So there's no direct communication. So let's put an example like sending to Asia. It can be initiated in Mexico, where I'm based, and then has to go to like a regional, could be New York, and then it goes to London, and then it goes to Hong Kong, and then to the final destination. So that means that it has a lot of touch points, and that also, it's only a message. Afterwards, there's also the actual payment that it has to be followed. That's why sometimes, because of the time zone, the time difference, it means that we can have like almost all up to 2 or 3 days to final settlement. That's considering if everything is perfect, because think about it's like if you are missing, for example, for further credit information, then the payment can be floating in 4 or 5 different places. And to get the funds back, it could take up to 3 weeks. Can we move to the next slide? So what will be the most compelling case for the usage of stablecoins? It is very important to notice that right now, what we are having, it is the capacity of real-time payments that has full traceability and eliminate a lot of friction that exists right now. Currently, for example, as I was mentioning, it could take several days. Right now, you can have the technology of doing that 24/7 for a minimum cost with full traceability and visibility of all counterparties involved. Can we move to the next one? Thank you. Okay, let's have a quick comparison here between both cases, traditional banking and stablecoins. And something that it is also very interesting, for example, companies or banks which are like, which used to be very traditional, right now they're moving into this technology. JP Morgan, they have their own framework in order to do the settlement by using stablecoins. They're also conglomerates that they are getting together in order to do the transfer and by having these jurisdictions and cross-border payments. It is very interesting also that right now there are several stablecoins being issued, some of them regulated, for example, by the US, and they are, for example, being used more commonly. But there are, for example, companies such as Western Union that already issue their own stablecoin. So there's some questioning on that regards, because how many stablecoins we're going to have. So I truly believe that at some point it will start consolidating, the same as the payment rails that we have. So in terms of timing and capacities, as you can see, the cost is significantly higher to do it through the regular means. It normally requires like the business hours from each jurisdiction, which is also, if you compare, like you have 13 hours difference between Asia and, for example, Americas. So you can have like a very difficult process for communicating and for settlement. And also, normal payment rails requires to have a corresponding banking relationship, which this, in order for you to have a US dollar capacity or check account or to do transfers, you had to get involved in a very long and diligent process of having an account for like an international bank, such as JP Morgan, Goldman Sachs, or many other ones, in order to have that one. And they have specific rules and risk appetite that you need to follow as a part of a corresponding banking, which in the other side, in stablecoins, you need to have obviously the infrastructure, the agreements with regards to the rails, but there's no corresponding banking there. So that's a very important difference there. So we can move to the next slide, please. What about, because you can imagine on the previous example, I was mentioning that you can have 4 or 5 touching points. Each of the banks which are in the middle, they need to earn some money. So if you have many intermediaries, you will have a significant cost. That's why you can see, and for example, you can see in different jurisdictions such as Colombia, Brazil, Argentina, that you have percentages of the transactions. We can go like up to 6% in Argentina due to volatility types of conversion, while it is much more standard by using, for example, USDT or a very well-established stablecoin. We can go to the next slide, please. Okay, something very important is it is not when, it is not if it is going to happen, it is when. You see, major institutions are already adopting stablecoins. For example, card issuers used to be very receptive about this type of infrastructure, payments, and flows. You must have seen and heard that Mastercard purchased 𝗏 for $750 million. Now, they're very interested. We have as client many card issuers already, like regional, local, global. In the other side, also Visa has mentioned that they are willing to adopt through their Visa Direct stablecoin usage. So that means that it is not if it is going to happen, it is when and how it is going to be adopted. And I would like to go into a use case next, in the next slide, please. What's the path to adoption? Please. Okay, first, I think that it will be how we want to adapt this. For example, there are PSPs, importer-exporters, okay, and then consortiums that they need to send money abroad, okay? Then what you have to take a look is what's in infrastructure and which are the services that you need, because right now we are in a market and the technology is developed into hyper-personalization. And with that, I mean is that, for example, within a bank, you are assuming a series of activities that are behind, but not necessarily are in a, for example, technology company or a crypto exchange, etc. Why? And let me explain you very briefly which are the differences. For example, having similar to a fiat bank account, this is something that payment institution can provide. Also, then, if you join this type of activity to a cross-border payment, which is fragmented or divided into different processes. One, it is the on-ramp, which means is that you're converting the fiat into stablecoins. Could be USDC, USDT, or many, EUR-C, any. And you have it either in a wallet, or you can transfer immediately into, and you have to burn these stablecoins, convert it into fiat, and do the last mileage. But with this activity involves, as you can see, one, having an account for fiat, the other one, the minting and the burning of these stable coins, and the last mile delivery, okay? Something that it is very important, obviously, to consider the different jurisdictions and the use cases. And with this, I mean, for example, Bitso is the largest crypto exchange in Latin America. But what it is so important, because it's the capacity with one single API to connect all across the region, including Europe, including US, and payments to Asia, for example. And that brings you a lot of functionality and capacity. So, for example, how people start adopting this type of technology. The way that we speak to the people, and I like to mention to my clients, it is that normally you don't know exactly how the light, to turn on the light works, but you are confident that when you turn on the switch, the light will come on, right? So exactly the same with the stable coins. People get concerned about the minting, the burning process, etc. But this is so fast, so reliable, so efficient that when people start realizing, it's like, it was that fast, it was that cheap. So people get in love of this type of technology and methodology. So once you have established this type of corridors, it gets like very, very interesting. Bitso, on a weekly basis, or on a monthly basis, we move, for example, between US and Mexico over $1 billion. And that's because the volumes and the effectivity and the optimization of resources gets very, very interesting. Can we move to the next slide, please? And something else that I wanted to mention, it is about the capacity of these rails. Why? Because you can now perform like smart contracts. Sometimes the concept sounds a little bit strange, but let's give you like a very quick example that we were looking the other day. Imagine that a foreign company would like to make an investment in a country like Mexico, and they need to get into an escrow account. Programmable type of contracts now are very easy through this type of technology, where on previous versions it is so costly, difficult to control, expensive, and it is prone to different type of errors. Right now, through this type of contracts, you can program the amount of payments, the people who are going to approve, who is going to receive, the reconciliation of these amounts, and also the whole process of information either to authorities, to third parties, or the people interested. So that becomes a very interesting use cases. So, for example, which are relevant things to consider, for example, when having this type of technology or type of services? Obviously, localization. It is very important that you have people understanding the regulations. Latin America is a very particular one, but it's not the only one. Brazil, it is changing very fast with regards to regulation. I don't know if we get people from Brazil right now, but in the past month, they have issued like regulations with regards to stablecoins. Same happens with Argentina with the cost, the cheque tax, which is the cost that you have for financial transactions. In Mexico, we also have the fintech law. So the nuances of each of the regions are very relevant. In Europe, you have MiCA, and you must have seen that many exchanges were not able to get or continue services because of this type of regulations. In the US, you got the Clarity Act, the Genius Act, which are quickly evolving, and they are very likely to get like finalized soon. through the different stages. They're very well advanced. The other thing, for example, it is they are open opportunities, and this is something at Visa we're very excited. Why? Because, for example, there are corridors that were not really explored previously. We have a very interesting flows between Mexico and Colombia, for example, and with Argentina across Latin America, which they used not to have that liquidity. And now, if we join that with new developments that exist, for example, in Colombia with 𝗿𝗏𝗶𝗴𝗺, you have like the capacity of serving clients which have remittances requirements in a very fast and efficient way. The other thing is about APIs. Having a single API to serve a whole region, it is very important because integration, it is the name of the game for this. We have the technology, but integration can become an issue, and it is very relevant. And finally, with whom you partner. It is very important, the name, that it is compliance first, that your money and the safeguard and the controls that the partner that you choose, they are really committed in a long term for the region that you are looking forward. That's mainly the presentation that I got, and we can move to the questions.
Terrific, Hector. Thank you so much. Very, very interesting. I want to say a quick hello to everyone. If you don't know me, I am 𝗬𝗠 Manager and Director of PCMI, and I'm going to be moderating our Q&A session right now. I see Nick's hand up. He's ready to jump in. Before we go to you, Nick, he's always our first one with a question, and I am always so thankful to Nick for getting our conversation started. Before we jump to Nick, Hector, I want to ask you, just for the benefit of the audience, you touched on so many fantastic points that I want to dive into. And I just want to ask you, for the benefit of the audience, can you clarify, how does 𝗏𝗏𝗃 business go to market? Do you sell directly to enterprise? Do you sell to financial institutions who are serving enterprise clients? How do you is it a mixture of both? You have both models. How are you interacting with the market?
Okay, sure. We have a 3-tier strategy. One, it is liquidity providers. High value, high speed, and obviously very, very relevant. For example, most of the major remittances, for example, or liquidity providers in currency, we interact, or either are my clients or they interact in the trading desk. We have our own desk as it is in a bank. This is the first tier. The second one, I call it partners. What is partners? Partners is mainly importers, exporters, okay, where clients who have clients behind. We have technology companies who are like lending companies. We have other types of, for example, advisors, like wealth advisors, that they need this type of services. So it could be a multi-tier structure in this middle layer. And then we have real companies, like 3,500 companies that are like real producers, for example, exporters of oranges to US, strawberries, auto parts, any type. So it is quite interesting because initially it was mainly on the liquidity providers side. It was the biggest chunk of our business. Now the 3 sectors are very relevant and very well equilibrated.
Thank you. That's wonderful clarity. So just to summarize, liquidity partners, kind of channel partners is what I heard, and then end clients and end users like the orange exporter. I love those crisp examples of the enterprises that are finding a need and adopting this technology. And before we go to Nick, and I am going to get to you, Nick, I just want to ask, the first question I have in my list here, Hector, is thinking about that enterprise end client. First of all, how big are they typically? Your sweet spot, or the ones who are ready to adopt this type of technology. And secondly, what is the trigger, or all companies around the world experience pain with cross-border payments. So what is that trigger, that final, where they say, okay, this is it, I have to move to stablecoin? Or what is their essential characteristic that makes them willing to move into this type of pilot and eventually full-fledged adoption?
Well, there are several. I will just name the most relevant that I believe. The first one, it is full integration. Why? For example, you have remittances companies in the US, in Canada, or now even in Europe, that you have full integration and a very low touch point from human beings. So from the pricing, the movement, the delivery, it is fully automated. And this is something that does not require many people. So this is something that it is quite attractive because you can have volumes. In 𝗵𝗲, for example, in Mexico, final settlement, we're over 12 million final settlement on a monthly basis.
Okay. So when you say integration, you mean the service that they're accessing needs to be fully integrated, very low touch, very simple,
yes,
I can manage it on my own. Okay, got it.
Yes. For example, in comparison for traditional banking, some of them, they're still in host-to-host, like file transfer processes, reconciliation, which can become like crazily difficult. That's in one side. Other use cases which are quite relevant, it could be even risk appetite. PSPs, they are not necessarily in the risk appetite for traditional banking, for example, which I believe it is a great opportunity for enterprises like 𝗵𝗲 to serve them. And the third one could be regional services. Why? Because the problem is that clients might need to have a relationship with somebody in Colombia, and Peru, and Chile, etc. And with one single relationship, we can serve them in a regional basis and very efficiently.
Fantastic. Okay.
Those are the main ones that come to mind.
The main signals, absolutely. Okay, fantastic. So let's go to Nick. Go ahead and jump in, Nick.
All right, thank you. For those of you who don't know who I am, I'm a super geek in payment infrastructure. I built Visa's global debit card system in '96. I've written international data security standards for the payment industry. I've pretty much done everything that you can in this. So I look at it from the technical perspective. Stablecoins on the whole that are issued by companies, I struggle to see the use cases that really add value. The one exception is this one. Interoperability and cross-border transactions is perfect use case for stablecoins. There is a risk involved though, and the risk is that who is guaranteeing the currency? I don't know about Latin American countries so much, but in the US, if you have a balance, the Federal Reserve that issued the dollar in the first place has FDIC insurance on it. So it's the issuer of the currency. The FDIC insurance will not cover stablecoins in the US in accounts because they didn't issue the currency, as far as I know, unless something has changed. So based on that, a question like the idea of stablecoins for transfers, for international remittances, is you would convert, as you said, from say dollars into a stablecoin, transfer it to another country, and then convert it out. My question is, do you have account holders that manage and maintain your stablecoin? And do they understand the risks involved because you're guaranteeing the currency?
Yes. Well, a couple clarifications. Actually, for example, USDC, it is being guaranteed by Circle, which they have a relationship in that particular case with Bank of New York, which is the holder of their vault, and it is pegged 1-to-1 to the dollar. And it's fully auditable, and you have full visibility on that regards. So it is the issuer of the stablecoin who's responsible for that. We're able to provide the service for minting and burning based on those deposits that exist. You very correctly mentioned, the bigger the company we start engaging with, they get some concerns with regards to the credit and the continuity and what will happen. For example, we have clients that move hundreds of millions of dollars for even in a daily basis sometimes, and they ask for either visibility or a different type of process. visibility in terms of like which are the vaults and which are like the audited amounts that they are securing. This was actually Circle, I think, is the third holder of U.S. Treasuries, and this is like market information. And with regards to engaging in this type of transactions with a client, normally, for example, we can offer them like sometimes some credit lines for prepayment. So we engage in transactions, we do the settlement, and then we receive from the client, because it is the way that we can feel more secure. There's also like this is evolving into new things which are very interesting, because now we have the possibility of have lending facility by hour because of this type of transactions and capacity. So with this, we were talking about like which smart contracts are now type of liquidity, but also which is very attractive, and why these type of companies are moving from like traditional banking. It is always about money. It happens that, for example, the cost of not having the resources for one weekend, and we're talking the larger the amount, the cost of funds becomes very significant, and the time to deliver the money also, and that's why it is becoming more attractive. And just one final comment with regards to, for example, the usage of like single companies creating their own stablecoins, like JP Morgan or like Western Union. They use it for closed loops, for their own infrastructure to move money around, and they do the final settlement on their side. So there are many types of these use cases. I don't know if I answered your question.
Terrific. Nick, thank you for the question. And I want to encourage everyone. Do we have any questions? I see, I can confirm Nick's super geek status. Love that, Daniel. Thanks for that comment. I have a question, Hector. We at PCMI, we've done a lot of research in fast payments, whether it be over digital rails, over stablecoin. We've done a lot of voice of the customer research, talking to people, individuals, sending and receiving remittances, as well as small business, sending and receiving invoice payments. And the question I have is, or maybe the friction I detect is that everyone, when sending payments, no one is eager to pay in real time. Everyone is happy to hold on to their money as long as possible. That velocity comes into effect when you're receiving money, right? Everyone wants to receive it in real time, and you just mentioned the cost of not having those funds for a week or so. But it seems like the onboarding process and the new solutions are provided typically to the sender rather than to the receiver, when it's actually the receiver who wants to get the money in real time, and it's the sender who wants to hold on to the money longer. So can you speak to that a little bit? And is there any, what your customers, when they're sending money, what is it that they're really trying to solve for, since getting money out of their coffers instantly isn't necessarily the true desire? Or, am I making sense here?
Yes, but think about this way. If I have to pay you, and I need to pay you Monday, 8 a.m. I don't know. I would say like Los Angeles time. What would you choose? Regularly, you will have to fund Friday before 1 p.m. using regular rails, and the cost of that money, you will not have it, or the earnings, you will not have it, rather than sending the money at 7:50 and the money will arrive on time. Mm-hmm. So to the sender, it is also a benefit, because I will have the money the longer. So it is just more efficient. The thing is that, as I was mentioning, the middleman's, the cost of reconciliation and processing from regular banking, that's some money that gets, like, at the end, banks get this type of benefit. It is not that it is get reflected neither in your account or in my account, because in my account it is already gone.
And that raises another question that maybe, when is payment, what does payment due mean? So if I have on my invoice payment is due the 1st of the month, does that mean you needed to have remitted payment by that time? Or does that mean I need to have the money liquid in my account by that time? I don't know that there's a solid standard there, right?
Yeah. Normally, please remember that when you are like engaged in an import-export, there's like time frames. It's like one, it is the issuance of your invoices, and then you have X time to settle. If not, they will, for example, the goods will not arrive. That's even start getting into use cases which are more interesting.
Right. Like I can't release the goods to you until the funds are received and verified and liquid in my account. Fantastic.
And it gets more interesting. For example, when you have a shipment, we need to verify both parts. And this is also part of the technology, which is very interesting, because we make sure that who's sending the money, who's receiving, what's the reason of sending that money, and needs to match in both sides. So that helps you a lot in order to avoid possible errors or roundings, or let's say instead of receiving 1,000, you receive $950. So that avoids all these type of frictions.
Yeah. And I think it's interesting, even Carla's mentioning payroll needs to be received by a certain date. So it's even interesting to isolate out those use cases where that question, where funds need to be verified, liquid, reconciled in my account by a certain date, or else there's hell to pay, basically. Those seem like very, even more, a way to even get more specific as to the use cases where this will add most value.
I know several companies which they actually preferred, because of the risk of not settlement, to do their payrolls one day before.
Yeah.
So can you imagine what's the cost of money involved in that process?
Absolutely.
It's huge. Daniel.
Yeah, Daniel, go ahead. I see your hand up.
Hello there. Hi, Hector. Nice to see
you.
Nice to see you too, Lindsay. So I've got two questions. One is more of a systemic question. The other one is more of a sort of like a top 10 thing, but I won't take too long about it. So firstly, in many jurisdictions, banks are principally focused on tokenized deposits. They're seeing stablecoins as a risk of deposit flight. Otherwise, similarly, you've got the safety and low risk of central bank money being seen as the key to maintaining financial resilience or infrastructure sovereignty. But what's your view on the need for a sort of complementary relationship between stable coins as a sort of settlement asset with a messaging instruction and other payment instruments to establish this kind of combination of scale and safety and trust for the multi-moneyverse system as a whole?
Yes, I think your point is very good, and it is more towards liquidity. What I've seen is that, for example, USDT, USDC, they're vastly used. There's like trillions of being transferred, usage, etc. So, and if you get the certainty that the vaults are real and the money is there, the certainty, it is quite large. Something that I truly believe in will be very interesting to see in the coming years is like governments issuing their own stablecoin and how this will interact. But this is something that will be interesting to see.
Thank you. That's really helpful. So the other, I don't know unless there's someone else.
Sure, please.
What are the biggest pain points for interoperability for stablecoins from your point of view as a cross-border network?
Well, there's so many networks, there's so many stablecoins, there are too many right now. And I think there's going to be a consolidation process. Everybody wants to be the most liquid and the preferred, etc. But it's market. That, I think, that will be the most interesting, because some of them it is about cost, some of them it's usage. They have different principles and different strategies. And I think that's and they're keeping appearing more. So that's the interesting thing. We got, for example, the requests from issuers from their own stablecoin to help them to have liquidity. And that's a costly process, at least for them, until this either get tracked or get like more involved, or it at the end it will be like more consolidated. But yeah, that's those are the main things that I see.
So Hector, you just mentioned banks and liquidity, and earlier in the presentation, ಮಿcha mentioned 6 ways that financial institutions can monetize stablecoin. Can you speak to that? What is the biggest revenue opportunity for financial institutions? Is it actually issuing their own stablecoin? Is it providing custody? How do they work with a company like yours? Is it treasury solutions? Where do you see banks? What's the low-hanging fruit for financial institutions today?
I think the most relevant thing is about technology adoption. And if you see, for example, the difference between neobanks and traditional banks. Neobanks with a very few amount of people, they are having thousands, like Revolut, they have like millions and millions of users, which are happy. And obviously the traditional banking, they are not that efficient. They're used like the type of technology that they are using. And I see it as an opportunity. I'm always a positive person. So the opportunity here, it is, and you can see this happening, for example, in places such as in Africa, for example. Why? Because they hardly have sometimes in some places telephones, but now they adopted so fast this technology. They did a quantum leap. And they adopted, for example, we have seen the adoption of stablecoins in Africa. It is very high. The other thing that I see, it is about opportunities, about ecosystems that banks will start to perceive. And with this, I mean, I mentioned about fiduciary services that now can be done through smart contracts. And that capacity, it is mainly today on banks. So that they can adapt, for example, do now the issuance of debt through tokenized bonds, and that capacity the banks have. So they still have many things on the regular sectors or in the traditional banking, that if they find these opportunities, I think they can leverage a lot. And obviously, as you have seen, global banks are adopting stablecoins as part of their regular business and together. And actually, this is one of the reasons I am in 𝗏𝗏. So we call it hybrid finance. How we do this bridge between traditional finance and now this type of technology.
I think that goes a bit to answer. Well, Natalia has asked, how could a bank compete with these new competitors, or are they at risk of disappearing? It sounds like you're saying, inevitably there'll be hybrid models probably throughout every area of finance. Do you have any additional comments to that?
The real adoption of the technology, and for example, in all the suite of products that a bank can provide, loans, FX loans, out of credit, many things that they are still in the traditional finance that can be leveraged through using this technology, that they have that edge. And the other thing is that they have the presence already, and they have many clients already. So I think that's the opportunity also for them.
Terrific. We have another question here from Christopher. Do you have any thoughts on the new Visa stablecoin settlement platform?
Yes. Visa, as a huge company, they are starting to envision through the millions of users that they get through their, for example, Visa Direct. And they are finding that they can't assist corporates or even individuals. On the corporate side, they're starting to look the opportunity of fast settlement. and this network that they have, and that's the real opportunity they are looking. And actually, many card issuers, they're looking into that as local, regional, global. They're very interested in this type of things.
Terrific. We're almost at time here, Hector. One question, final question I have is if you could speak a little bit to the corridors. On one of your slides, it said LAC US Europe is a concentration of activity. You also mentioned emerging intra-regional flows, and I think those are quite interesting because they're slightly invisible. They don't get that much attention, but of course there are flows and there are unmet needs there. Where do you see, where's the next corridor opportunity that you all are pursuing, and why is that?
For example, in the particular case for 𝗬𝗀, and something that we have perceived and based on efficiency, for example, we are looking into getting into the edge. And with this, I mean, for example, regularly in Latin America, in order to go, for example, from Mexican peso to euro, you have to pass through US dollar. Right now, we're doing the avoiding passing through dollar. It's directly from peso to euro, and that's an efficiency. So we're talking about 10, 15 basis for that conversion only. So, and if we add to that, Mexico signed with the European Union on May 22nd an agreement to lower close to zero all import and export taxes. And it is expected to grow 35% only in 2027. So that's a great opportunity. We're obviously, based on that, we get the interest on the three different type of layers, liquidity providers, partners, and real companies, which are both either there are companies which are from Europe and they want to start to consolidate their treasuries, and that's another functionality that is quite interesting for them. The other thing, import and exports, that now, can you imagine, some of them, they are lowering or their costs will diminish significantly. And this agreement covers financial services, auto parts, food, wine, many things. So that's for me.
That seems like a fantastic emerging opportunity that will, with the barriers reduced and the infrastructure challenges solved for, that could really flourish.
I think that, and something that is quite interesting, because I've been in the road quite some time lately. With this, I mean, I was in Money 2020, Asia, Amsterdam, etc. And at the beginning, from last years, I saw a little bit of resistance, especially from European clients, in engaging with Latin America. That's not the case. Right now, for example, on the last Money 2020 that I assisted, the government from United Kingdom, they were like keen to engage into more activity. So for me, that was a breakthrough, because now even the governments are fomenting this.
Fascinating. And governments are very invested in promoting trade and exports. And so if they can be associated with opening up windows and opportunities for local businesses, that would be a huge win, certainly. Excellent. Okay, well, we're just about out of time, Hector. I want to thank all of you who asked questions and participated, had your cameras on. I love to see your smiling faces early in the morning. Hector, I want to ask you, you have 56 folks on the line right now. Who should get in touch with you if they're looking to solve XYZ problem, if they're XYZ type of company? Who should get in touch with Hector Ramirez from 𝗏𝗏 Business?
Please. Happy to chat about market, about opportunities, about everything. I am a tremendously curious person, and if it is not me, I can maybe know somebody who knows. So yes, please contact me. Happy. I'm very open in those terms. I learn from chats, I learn from people, and that's how opportunities appear.
Fantastic. I know we have some equally curious people in the call today. So Hector, I wouldn't be surprised if you have some folks reaching out. Please feel free to do so over LinkedIn. If you contact us, we can also connect you directly. And I want to remind everyone to join us next month, August 19th, for our next coffee chat session. Make sure that's on your calendar. Please share it if you know folks who would be interested in joining us. Hector and the whole team at 𝗏𝗀 Business, thank you so much for joining us. Really enlightening conversation. We study cross-border payments all the time, but it is always extremely exciting and enlightening to speak in depth with one particular practitioner who sees it from all different angles. So really appreciate your time. Thanks for being with us.
Thanks so much for the invitation, and happy to participate. Thank you so much.
All right. Thank you, everyone. Have a great couple of next weeks until we see you on August 19th. Take care, everyone. Thank you.
Thank you. Bye, everyone.